More than just ChatGPT, artificial intelligence is the driver behind nearly every other transformative technology, from robotics to genomic sequencing, Internet of Things, and self-driving, that could cause demand for AI software and hardware to more than triple the Wall Street estimates to a $15 trillion market by 2030, and create an $87 trillion enterprise opportunity for stocks in the space, almost 35 times the current value. Hey Bowtie Nation, Joseph Hogue here, and I found 5 top AI stocks you need to be watching. Not only will I show you how to find these, but a reason to invest you probably haven't thought about. Now I want to start our list with 3 AI funds. First, because buying into one of these is going to give you that broad exposure across the theme, helping you benefit from that runaway growth across artificial intelligence, but also because it's a great way to drill down and find other stocks to buy in that theme. We'll look at 3 ETFs here, all focused on that robotics and AI theme, how they're set up, and how to use them to find other AI stocks to watch. The largest here is the Global X Robotics and AI ETF, ticker BOTZ, a fund of 44 stocks, up 25% so far this year. I'll break down the holdings of all 3 ETFs together for this, but this is probably the most focused of the 3 funds. Next, the Global Robotics and Automation ETF, ticker ROBO, a fund of 79 stocks, is up 15% so far this year. It's a little more geared towards that industrial use side of AI and is quite a bit more expensive than the other 2 funds at 0.95% expense ratio. So I'll mostly just be using this one to mine the stock picks instead of investing directly in the fund. Then the iShares Robotics and AI ETF, ticker IRBO, is the smallest fund at just $303 million market cap, but the broadest of the 3, holding 116 stocks. This one is also up 15% since January, but I thought it had some questionable choices, like the fund manager is kind of stretching trying to say that stocks like Netflix and Spotify should be in an AI fund. Again, each of these is going to give you that broad exposure, but more importantly, you can go to holdings here on their website and download a full list of all the stocks in each fund. It's the fastest way to find those individual stocks in a theme that you might want to research further. I combined that list of stocks and found just 9 stocks in all 3 ETFs, with only 7 of those traded in the US exchanges. Now, several of these are more robotics focused than AI, but it's a great way to start finding your companies to watch. The Global X BOTZ and then that Robo ETF each have about half their stocks from foreign companies, stocks US investors normally wouldn't get access to, so that's a big plus for that broader exposure to the global AI theme. You can also use the fund weight data on these, the percentage of the fund invested in each stock, to get that sense of the confidence the fund manager has in each stock. So using this and then other research, we can start to narrow down our list of 4 other stocks to give us that targeted exposure to specific companies. And we can't talk AI without Microsoft, ticker MSFT, an early investor into OpenAI. Now, Mr. Softy was one of the first investors in OpenAI with a $1 billion investment in 2019 that has now added another $12 billion into the company and a valuation of the startup at $29 billion. Not only does Microsoft participate in that potential returns to the company's growth, but it's also the exclusive provider of computing power for OpenAI research, products, and interfaces for developers. That's going to mean a boom in demand for Microsoft's Azure cloud services. Remember, it was OpenAI's ChatGPT that sparked that race in AI this year, and now Microsoft is integrating the technology into Bing Search, sales, marketing, as well as Office 365 products, with Wells Fargo analyst Michael Turin estimating it could add over $30 billion in new revenue for Microsoft's cloud services alone. Now, the problem for Microsoft and its investors here is that OpenAI was set up as a capped profit entity after its startup as a nonprofit. Now that means returns are restricted to 100x their money for early investors and even less for later investors like Microsoft. Any profits beyond that go back into the nonprofit side of the business. But that still does leave lots of room for upside for Microsoft, not just in integrating those AI tools across its products, but also that return on investment. But shares are already trading a little expensive here at 33 times on a price to earnings basis, and it's a $2.3 trillion company we're talking about here. For Microsoft to even 10x your investment, it would have to come close to the size of the entire US economy. So I want to be looking for some smaller, undiscovered plays in the AI theme as well. Now, one of the most interesting opportunities on the list is Anthropic, founded by ex-OpenAI employees. Now, where the biggest worry today is that public use of AI and potentially negative outcomes, Anthropic is focused on safety in artificial intelligence. Now, Anthropic launched Claude, a cloud GPT competitor, in March with the expressed intent to avoid some of those harmful outputs and safety issues that we've seen with OpenAI's ChatGPT. And the language model uses a constitutional AI framework to guide the output in kind of a subjectively safer and more helpful direction. In essence, Claude has been called the AI with a moral compass. In effect, it's built a system that is less likely to produce that harmful output. It's easier to hold a conversation with and easier to use with less effort. So while ChatGPT may still be better for tasks such as programmer coding and generation, Anthropic's Claude could become a more human-centered chat system. Anthropic was founded by OpenAI's former vice president of research, Dario Amodei, and Tom Brown, its lead engineer for AI language model GPT-3. It's since added technical staff and expects to launch a frontier model of the Claude chat tool that will be 10 times more powerful than existing AI models. The company has an impressive list of backers, including a $300 million investment from Google that gives it 10% of Anthropic, as well as a $1.3 billion from Salesforce Ventures, Facebook co-founder Dustin Moskovitz, and other investors. The latest funding round in March valued the company at $4.1 billion. Now, Anthropic is still a private company, but if you're an accredited investor right now on the Disruptor platform, you can invest in the company for as little as $5,000. Disruptor offers investments in the most advanced private companies. Right on the platform, you can get detailed information about the company, the structure of the deal, fees, and investment risk, and apply to invest. I'll leave a link in the description below for that Anthropic deal on the Disruptor platform, so check that out. Another publicly traded AI stock here, though, much more focused on that theme than Microsoft, is Palantir Technologies, ticker PLTR. Palantir is leaning heavy into artificial intelligence with its AIP platform for business and a standalone platform for defense. The software platform builds analytics and AI solutions to use immense data libraries and help in real-time decision-making. In fact, the new AIP platform includes a ChatGPT-like language model and other applications here integrated into the company's existing machine learning technology. CEO Alex Karp noted in the Q1 earnings that demand for AI tools has been unprecedented, helping the company to grow revenue by 20+% in the US and become profitable for the first quarter ever. And what I really like about Palantir here, besides that double-digit growth, management is focused on becoming more profitable at the same time, increasing the operating margin to 24% in the quarter. The full-year revenue for the company is expected to come in 16% higher at $2.2 billion, which means after that 59% run in the shares this year, it's trading at 46 times expected earnings of 22 cents a share, even more expensive than Microsoft. Now, I do think Palantir has the more focused growth in AI, but the stock price is baking in a lot of that growth. And we've still got that last AI stock you need to be watching, and we've already covered that immense opportunity in growth and potential return. Even if this estimate by ARK Invest is off by a wide margin, instead of growing to 87 trillion, let's say the equity value of AI companies just grows to $50 trillion by 2030, that would still be a 20-fold increase or a 30% plus annualized return. But investing in AI stocks goes way beyond that return because it's also income protection. Folks, if you work in, just about anything, there is a chance your job goes bye-bye because of AI. Artificial intelligence is set to revolutionize work, touching nearly every job and increasing productivity by estimates of 140% just in the next 7 years. Now, this goes well beyond the jobs shown here. What about those truck drivers or taxi drivers replaced by self-driving? What about the warehouse workers replaced through robotics? Nation, corporations say productivity increases, but we all know what that means. It means getting more done in less time or fewer people. Now, I'm not preaching the end to all jobs like you hear about, but the only way to fully protect your income from this kind of shift is by investing in the companies that will make it happen. But maybe I'm just being paranoid. What do you think? Let me know in the comments how far you think AI is going to go, from a little more than a meme generator to the robot apocalypse. Shares of Nvidia, ticker NVDA, jumped 14% on its most recent earnings after the CEO called the potential in AI a transformative iPhone moment. Nvidia pioneered the accelerated computing critical to the shift to AI, a combination of super-fast chips, algorithms, and refactoring to speed up the traditional compute-intensive parts of an application. And no other company has benefited from the recent interest, with shares up 109% just this year. The company recently announced a partnership with Deutsche Bank to accelerate AI and machine learning in the financial services sector, following Nvidia's expanded partnership with Mercedes-Benz to develop AI systems in auto. Now, as you know though, that AI focus comes at a cost. Full-year sales are expected 12% higher to $30 billion for earnings of $4.58 a share. Now, that puts Nvidia at an even pricier valuation of 65 times on that price to earnings basis. Invest in AI company Anthropic with the link below, or click on the video to the right to see how much you'd have investing $100 in the QYLD each month. Is that 14% dividend too good to be true? Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.